Thank you, everybody, for attending. I'm wearing this because I have a cold, and I'm protecting everybody from my cold rather than anything more nasty. Welcome to this panel. We've been hearing quite a lot from junior miners today, talking about their projects, and we've also heard a lot about the importance of ESG. I would like to welcome to this panel, in no particular order, as they say on Strictly, Ian Maxwell, who is an operating partner at Pacific Road Corporate Finance and has previously worked with BHP Coal and Citigroup. Sadly, Michael Barton can't join us today. He's a bit poorly. But we also have Amanda van Dyke, who is Managing Director of Arch Emerging Market Partners. And in addition to working very extensively in the junior mining investment sector, she's one of the major driving forces behind Women in Mining UK. Thank you, Amanda, for that. Richard Elmer is a director of Piésold. Richard is a geotechnical specialist, particularly with respect to mine waste and tailings management. And last but not least, Guy Winter, who is a partner at Fasken, and they are sponsoring this panel, so thank you to Fasken. In addition to advising on equity and mergers and acquisitions, Guy is a member of the Department for Business, Energy and Industrial Strategies New Critical Mineral Expert Committee. So welcome to all of you. So to kick things off with a nice general question, Ian, over the last couple of years, ESG has been the kind of new buzzword, but it's not really a new concept. So what is driving the current investor focus on ESG? And is it simply a current trend or is it here to stay?
Yeah, it's a good question. Can you hear me okay? That seems...
You sounds fine to me.
Great. Look, I think it's been a trend that's been going on for a very long time. We can think back to CFCs, for example. We can think back to the trend in health and safety, where you've seen the mining industry take really a leading role, I think, globally in its performance in that area. And that trend's continuing. It's clearly continuing into different areas of the environment. We see it continuing particularly today into the Indigenous affairs area. So I think if I were looking at this as a corporate or an investor, I'd be looking at it as a trend that's very much here to stay. And I think the critical thing for companies is to recognizing that, get ahead of the curve.
Yeah.
Would be my main advice.
Great. And so just following directly on from that, how important is ESG performance to initial investment decisions?
Well, I think it's critical. I mean, if you look at ESG failures, ultimately that can lead to your loss of license to operate. Certainly it can lead to business disruption. It can lead to loss of cash flow. And so when you look at it in those terms, it's equally as critical as grade or tons are. And certainly from a Pacific Road perspective as a private equity investor, we very much consider the ESG components alongside the technical components. And with my other hat on, which is CEO of North Coal, which is a Canadian metallurgical coal development company, the reality is if we don't design our projects with ESG at the heart, these things will never get up and running irrespective of the grade and tonnage. So, it really is very, very important.
So, Amanda, as an investor, how do you want junior mining companies to disclose their ESG performance and to meaningfully demonstrate that they're not greenwashing, but they are actually adding value?
The truth is that ESG is different for every single asset. There has to be a customized ESG plan based on, just like there are different commodities, different locations, different social licenses. So I think the point is, the earlier that a company starts thinking about all the aspects of ESG and documenting it and putting together a plan and an approach, the better. But in addition to that, you really need to be prepared to customize an ESG plan. The same way you would build a PEA, a feasibility study, you need to have an ESG study. And you need to be considering it at a board level, at every level of development, from exploration all the way up to production. So I think that you first have to figure out what parts of ESG apply to you, and then you need to monitor it, have plans, and implement it over time. And how you disclose that is going to be dependent on what you're doing. Not every project has a tailings dam, but if you do have a tailings dam, you're going to have to come up to ICMM standards, for example. Every project needs to come up to the IFC performance standards. They're a great place to start. But beyond that, it's going to be customized to sort of what the specifics of your project are, and you need to figure out what those specifics are, and then be very transparent about how you're managing them and how you're monitoring them throughout.
Thanks. So you mentioned the global industry standard on tailings management, and the investor industry has been very heavily involved in helping to establish those. So Richard, if I jump to you, how well do you think juniors are adapting to the new requirements that are set out in these standards?
Well, in our experience, excuse me, they are adapting. There's a genuine will to do the right thing, and even in the junior space, we're seeing very strong intent to comply with those standards. They're not easy to comply with, and it's not something that can happen overnight. We're saddled with a lot of legacy facilities that are very difficult to retrofit to the new standards. But the mining companies themselves, the juniors particularly the London-listed ones that we work with, are all very much working towards compliance with the global industry standard. And as I say, it's not an easy thing. There's 77 individual criteria that they have to they have to meet to be able to comply with it, and that's sometimes that's an expensive route to go down, particularly if you need to do more engineering to correct some historical difficulties. But it is happening. They shouldn't be scared of it. A lot of the juniors have been doing exactly what the standard has been requiring of them. They've been designed by reputable consultants, engineers, and they're being operated in a good manner. It's recording that and showing that you've actually gone through that process. That's the key to it. The one element where it's relatively new for them is disclosure, and that applies to a lot of the other ESG requirements that we're talking about. That's where a lot of our clients need to work on. They're doing the right thing. They need to tell people they're doing the right thing.
Yeah.
Fiona, could I add to that, please? I mean, I think it's generally the juniors get a bad rap. And there's a perception that the big companies do things better and the smaller companies don't. And that's not my experience. I mean, I look at the companies we work with, and oftentimes the management teams were sitting in an Anglo-American or a Rio Tinto or a BHP only a few years before. The consultants are the same, and the quality of the people is very good. So I'll give you an example. At North Coal, one of our companies in Canada, Pacific Road was also very heavily involved in the development of the tailings standard. And we've driven that into North Coal. North Coal in its designs has completely eliminated separate tailings dams in its designs. So not only has it gone down the route of dry stack tailings, but it's actually embedding the tailings within the waste rock facilities to completely eradicate the tailings facility at all. Well, there's an example of a junior company really leading practice and doing what the tailings standard suggested should be a future goal rather than necessarily a current one. And I think that's a great example of what smaller companies can do.
Yeah. So kind of building on the need for stronger disclosure, building on if they are doing good things and disclosing it. Guy, how, from a legal perspective, how prepared do you think they are for, gaining finance, undergoing the mergers and acquisitions and the due diligences that need to happen? Are they ready?
It's very interesting just picking up on what Ian was saying there, because I was thinking about the dynamic between majors and juniors in ESG terms. I was sitting in my 10-year-old Ford S-Max, and my neighbor drove by in her new Tesla. And my daughter said, we should get a Tesla like that. They're so environmentally friendly. And I was just thinking, it's not that she is more committed to the environment than me, and she probably hasn't spent the time in disgusting renewable energy from waste site visits that I have, but it's the resources that she has to allocate to it. And I think it's really interesting to see now this real dichotomy coming through with junior mining companies, really in terms of whether people see ESG in terms of equity, in terms of something that can really form a very valuable part of the business, something they can actually use to access capital to drive efficiencies, or whether you see it as debt and it's essentially a compliance thing, in which case it's much more likely to get siloed and not to become part of the sort of DNA of the company in the way that, you know, just as Ian says, you see really exciting junior companies coming through because the ESG angle has been part of the way they've approached the business from the outset. And we have clients who have approached us looking at doing hydrogen plants in remote locations, you know, really far ahead in terms of the kind of technologies that they're looking to deploy. And that's all because they recognize that their license to operate and their ability to access capital is going to come from how they prepare themselves for the very kind of investor discussions that we've been talking about.
Thank you. So Amanda, you and I were at the same session yesterday, and a common theme was kind of how do we make this real, and how do investors help the junior mining industry. So from your own experience, what do you guys do to make sure that they're on the right track and that you can help them achieve their outcomes?
So we're development stage investors. We're looking to get a project that has been found into production. And the first thing we do is DD what they've done already. And we do the same level of due diligence on site for ESG that we do for the asset and the engineering. Because that is now necessary. And that's not to say these companies need to be perfect, they just need not to have any glaring red flags. And after that, what we actually do is help them create what's called an ESAP, an Environmental and Social Action Plan, that the entire board has to sign off on for them to deliver this into production with certain principles and priorities of environmental and social and governance embedded into the company from sort of day one. And I think that's a really, it ties on what's been said earlier. The truth is these companies want to do it better. When I'm telling them I'm going to, tie them into an environmental and social action plan that's going to cost money to deliver, I don't get any pushback from these companies. They've never been paid in the past. They've never been incentivized. They've never had investors tell them that they were willing to pay for them to do things in the most sustainable way possible. But now that the investment is coming with that requirement, they jump on board as quickly as they can, is my personal experience. They're looking to find, I do things like, put in some renewable power to try to make the carbon footprint come down, and suddenly I have the entire team coming up with ways to not just reduce carbon footprint, but to reduce their tailings footprint, to reduce everything. The fact that they can get paid to do this right, I truly believe that the junior industry, at least in my experience, is all over trying to be the most sustainable industry on the planet, given the opportunity to do so. And we're at a unique position now because the investment community is now just as aligned with the junior mining community and society at large in trying to deliver those sustainable solutions.
If I add to what Amanda was saying there, we come at it in a very similar way. So we will look at incentives for boards for ESG performance, disincentives where the performance is not good, really getting a substantial part of the scorecard focused on ESG. The second thing we do is we've got a series of policies and standards within Pacific Road that don't reinvent the wheel but tell our portfolio companies where to go to tap into best practice. So for example, in the area of reporting, we'd like them to work with GRI and SASB, bring in the extractive industries, transparency initiative if they're in high corruption countries, those sorts of things. So really help them with the tools of where to go and what standards that have already been written they should be reporting to. And then really our third piece is around the verification of that performance, which links back into the incentive cycle. So that's how we tap in.
So sticking with you, Ian, do you have any examples? I mean, for example, related to the outcomes of the recent COP26 and the new demands about how either you're helping through investments or through your own company to address the challenge?
Yeah, so probably the best example I can give is to go back to coal, because that's the thing that COP26 had very firmly in its crosshairs. So with the metallurgical coal project in Canada, we've really worked with the company North Coal there to develop a strategy of being a net zero coal company. And whilst that sounds like a bit of an anathema, we can certainly achieve net zero on scope 1, scope 2. We've partnered in that company with the University of British Columbia in order to achieve that. The benefit in Canada, we have renewable hydro as our scope 2, so that helps. And we've purchased a substantial block of land for carbon offset, sequestration, biochar, etc., in order to be able to achieve a net zero position. The other thing we've done in that company is partnered with Responsible Steel, and we're one of only 2 coal companies to be in Responsible Steel. And the objective there is to really find a like-minded steel mill to really try and explore the scope 3 area, so that we don't just have strategies and tactical costed plans for scope 1, scope 2, but we also have a plan in place for scope 3, which ultimately investors are demanding and we need to deliver on. So, there's an example again of where a small company with the right leadership can really make some big strides.
Well, that leads nicely into a topic that I think is very much coming to the fore, and that's kind of responsible sourcing. So, Guy, we've seen significant ESG developments driven by the supply chain demand, as we've just heard there. And new standards are being developed for various commodities that set expectations around ESG performance. So a junior company is now juggling not just expectations from investors, but also expectations through the supply chain. So what advice have you got to kind of ease the burden on junior miners having to deal with this?
Yeah, I mean, it's a really interesting topic, because obviously inherent in the huge opportunity that is generated by energy transition and the huge additional demand for the minerals to actually build this new energy infrastructure, of course you're coming into contact with completely different end users and the demands that those sophisticated OEMs have. I mean, I think it's particularly interesting from the point of view of the juniors, because we tend to talk about this topic with quite a kind of history from above sort of view. So we read in the newspaper about Tesla and Glencore and BMW and Managem, and actually a lot of the juniors will probably not have had the sort of day-to-day impact as yet, coming right down to where they are in the supply chain. And so one of the most important things, I think, is to actually be positioning for those demands as they completely permeate the supply chain. So I think the really important thing is not to be focusing on the standards that you may have been working to historically, but actually to consider who you're going to be supplying in the future, how that whole integrated supply chain will work. And people may have to take some quite tough decisions, because ultimately, if there is a tier 1 and a tier 2, if there's differential pricing for ESG premium, and not everyone is going to be supplying that. By definition, there must be someone in tier 2. So are you building that into your planning, the fact that you may not necessarily be reaching the criteria? You might have to ship some tons that aren't actually in that kind of tier 1 category. So all of these are very real challenges, I think, as people plan ahead. I mean, I guess in terms of, there hopefully are some rays of light in terms of this incredible complex matrix of standards that people have to comply with. I guess we're seeing some kind of homogenization emerging, and the work that people like Towards Sustainable Mining are doing, because what they're actually trying to do is to interweave their standards across various different minerals and to create equivalencies. And so I think one thing that the industry as a whole needs to do is really be engaging with the suppliers and the investors to ensure that homogenization and that creation of that equivalence is taken forward to reduce that regulatory burden, which is otherwise, very significant, I think, on junior miners.
I might jump in here. A lot of the feedback we get from junior miners when we're speaking to them is that they're just confused. Fiona yesterday put up an incredible slide that actually, even though I knew what they all were, it was interesting to see them all in one place. There's so many standards out there, and it is really confusing. But there are some general ones that I think junior miners can take comfort from. The IFC performance standards, if you consider them in what you're doing, they cover most things. And I would say that there's the new IRMA certification for mines in production. This is what look to where you want to be. And where you want to be is an IRMA certified mine in the end. And your path to getting there is going to be different. But if you keep a couple of standards in mind and document everything you do, and the documentation is key. A lot of these companies do really good work, but they don't document it, and it's like it never happened. But document all of the conversations on the environment, all of the studies that you do. Start your environmental baselines work as early as you possibly can. And document all of your social interactions and all your government interactions. As long as if you keep a record of all the work you do, that's going to form part of the long-term transparent record that's going to serve you through to the very end of mine closure, frankly. All of that documentation is important, and while the world of new standards is incredibly confusing, like it confuses us, and this is what we do for a living, there are some basics, and a generalized standard is going to happen one day. It could happen next year. It could happen in 5 years. I'm not sure. But if you stick to core principles, which we all know, you'll be ready for it. And it doesn't matter what the standard is in the long run.
Yeah, look, I think there's a couple of issues there which are worth adding to. The standards piece, the reality is it took the accounting and financial authorities the best part of 30, 40, 50 years to gravitate to the international accounting standards. We are going to see gravitation towards common ESG standards. It will take time. My counsel in that space is look at your company, look at your project, look at the material risks, and look at the key standards out there that match and really focus on that materiality at this point in time. I think on the piece around responsible sourcing, as a primary industry, our procurement generally isn't very deep. We procure oil, fuel, lubricants, etc. But the use of our product through the supply chain is incredibly complex. And so there are now tools such as blockchain that one should be tapping into really to provide that transparency. Certainly if you're doing a very good job on your carbon or ESG or other things that you want to get through to the customer and get paid for it. So for example, we've partnered with an organization called Circular. They do a great job in this space. They have on their books some of the most progressive OEMs such as Volvo, Polestar, Hyundai. And our challenge there is very simple. From a mining industry perspective, the coal and the iron ore companies really want to get on top of their emissions. From a customer perspective, the car manufacturers really want to get on top of the supply chain in their products. But we have a midstream there called the steel industry, which is living 20, 30 years ago and doesn't want to come to the party at this point in time. So triangulating to get that pressure on the midstream as well. But certainly as a junior, you can be as active in that space, given the emerging technologies, as any other company can.
So we've been hearing quite a lot about expectations from the investor side of things and the need to start early. Richard, if I come to you, we've heard about what the expectations are around ESG, but ESG isn't just about a bunch of tree huggers and social scientists going out and talking to communities. It's about integrating it with the engineering. So what's the role of engineers in achieving what everyone's been saying.
Yeah, no, absolutely. Early engagement is the key to that, and it's through the pre-mining phase, through the mining phase, and the post-mining phase that the engineer needs to be involved. It's one of the things that I've always said in talks that I've given over the past few years, is that you can have all the ounces in the ground of gold, but from my perspective, if you've got no safe way of storing the tailings and the waste from those, you still haven't got a project. And it's that pre-mining stage where you can really look at the options, and that's one of the other things that you must do as part of the disclosure and reporting and recording, is to show that you've looked at all the different options and you come up with the right answer to progress the project in a sustainable way. It's the mantra that we're hearing a lot through today's talks and through the various ones that happened yesterday as well elsewhere. It's that early engagement of the engineering as well as the environmental, as well as the economic. It's those 3 E's right from the beginning.
And Richard, if I stay with you, the Global Industry Standard on Tailings Management places a very heavy emphasis on the need for management systems. And there are other industry standards, as we've talked about, towards sustainable mining, which is the Canadian one, the IFC performance standards, as Amanda's mentioned, and many others. So how do you think that demand for management system plays out at the different stages of the project development?
Well, one of the key principles of the GISTM is the knowledge base, and as I will talk to my specialisation, I'm afraid, but we've seen where the tailings management has gone wrong. It's usually because engineers have changed, owners have changed, and the information's been lost in that process. So it comes back to knowledge base, information management, and ensuring that there's continuity of that knowledge through the whole lifetime of the project, right from these stages I was talking about just now, from pre-mining all the way to post-mining stage. And having that knowledge base is a key pillar to the GISTM particularly, but also applies across the board to all the other environmental, social and governance issues.
Well, maybe that's a good opportunity to widen the knowledge base out to the audience and see if there are any questions for our panelists. Anyone? There's someone hiding back there. I can't see you. No? Okay, well then I will...
just while we're thinking about that, if I can add to something that was said earlier, which is I think is incredibly important, and that's when you're designing a project, design with the end in mind. And the end in mind means the total environment into which you're putting that project. So, for example, what are the cumulative effects that exist at the moment? Not just from mining, but from all sorts of industrial activity. What are the impacts on First Nations cumulatively at this point in time? Build those into your project plan, build them into the project design early, and then do the back calculation to what that resource can do in order to fit in with what the world will accept. I think too many of us start with the engineers saying, here's the resource, here's the optimal extraction, and that's what I'm going to put out to society. And society says, it doesn't work. And I think that's one of the reasons why you're starting to see such long delays in EA processes, because proponents are simply putting projects forward that can never be approved.
I might jump in there as well. One of the things that we keep talking about is managing the process. And increasingly what we're seeing is that the best projects, the projects that get permitted, are thinking about all of this in advance. But traditionally, especially in junior mining, you start with some geologists looking for the rocks. Then you think you have a project that could be economic. You hire some engineers to design a really good project. And then, you get some ECM contractors to build it. These days, you actually need someone who manages ESG as its own specialty. The most successful mining companies, the most successful developers, you'll notice, all have at least one person who's got sustainability or ESG in their job title, who's watching it, who's reporting to the board, and who's reporting to the market, and who's overseeing the operations as they develop. It's a specialty within mining that is kind of new. We always had the skills, but they were in lots of different places throughout an organization. Having managing ESG is a specialty, and increasingly I think you're going to see that as one of the keys of good management is ESG reporting to the board, is ESG being one of your KPIs in and of itself.
Yeah.
You know, one interesting thing we've seen recently in that regard is listed companies actually looking to introduce ESG committees of the board. So whereas traditionally you obviously would have had your audit and risk, your remuneration and nomination, people are actually saying, you know, we need to have an ESG committee, and that's designed to make sure that it has that kind of focus in the same way that I think people understand pretty well what a risk committee should do in terms of overseeing a financial function, and in fact the external consultants as well. And so the ESG committee can sit on top and also then be considering from a higher level how to bring together the different parts of the company. And so I think we'll see quite a lot more of that in the years to come.
Similar to what Ian was saying earlier, we require all the companies we invest in to have an ESG committee of the board. We don't necessarily require an ESG manager, but that kind of comes out of it in the long run. But an ESG committee of the board, I think, is now going to become as common as a remuneration committee or an audit committee. It's about embedding ESG into the infrastructure of what it takes to manage mining.
Thank you. This morning in the ESG roundtable that Sarah was moderating, hi Sarah, she suggested we should be using the term post-mining rather than post-closure. So looking towards the
I stole that just now.
looking towards the end of the life of the project, but thinking about the beginning of the project, what is the role of the ESG committee or the junior exploration or junior project development company with respect to trying to think out of the box with innovative thoughts about the stewardship? I'm again coining some of Sarah's fabulous terms, thank you, for beyond the life of the mine. Anyone? Oh, thank you, Ian.
Look, it's absolutely critical. I mean, one approach we took in Canada, which has got a very high First Nations content, is we did the initial drilling and we discovered 3 mining areas. And at that point, even before we got into the engineering, we did what was called a fur bearers group with our local First Nations, where the knowledge holders, traditional knowledge holders, literally walked the ground with us and with a number of other experts. And on the back of that knowledge holders survey, 2 things came out. One was there was an area of the resource which was particularly culturally sensitive, so we took it out of our mining plan completely, and as a result we're only mining 2/3 of what we've discovered, and that's fine. We can still make very good money there. The second thing we did is, with the fur bearers group, who as I say were a collection of traditional knowledge holders, posed them the question, which is what would they like this land to look like at the end of the mine, sitting on their traditional territories. So they worked that with their indigenous communities, came back, and we ultimately built those designs for future land use into our plans. Now, their designs would have been very different from what a traditional approach might have been to turn this back into pristine wilderness. That wasn't what they wanted. So they wanted other things, and we built those into the final mine designs. And I think that was probably saved us a lot of money in terms of engineering something we would never have done. Certainly saved us time as we move through the permitting process, because we really have the engagement and enrollment and buy-in of the First Nations, and actually helps when it comes to presenting our case with the regulators, because the first thing they do is talk to the communities and say, you know, have you been consulted on this? So there's an example of what one can do.
That's a really good point. We've found, obviously, a lot of what we do is returning tailings facilities to. We're often surprised by, or rather, it's arrogant of us to assume what is wanted.
Exactly.
And we've all, I'd say all, the industry has been guilty of that through time. Engage with the local communities, and you get surprises at what they actually want, and that's what you can then engineer in from a very early stage.
And be prepared for it to change over the life of a project, particularly
Indeed,
a long
listening.
life project, because people's attitudes change over time.
Yeah, keep listening is the.
I would also say I would totally agree. The sort of default of writing any ESIA application kind of thing is return it to what it looked like before and we've done our job.
Yeah.
And that you do have to consult with the community about what they want it to look like. But one other aspect of there's an E, an S, and a G, and they're actually, they get lumped together, but while they're all interrelated, they are also separate. On a project that we just invested in Africa, our head of ESG actually came with us to the project, and it was very interesting because she did something I've never done before, and she put it to them very bluntly in terms of a community meeting. This life of mine is 18 years. In 18 years, we will be gone. The mine will close. You need to think about what you want the legacy of this mine and this community to be for your children. Because there's an S in ESG, and that community evolves with you, and it's generational. But at some point in time, the mine's going to be gone. And coming from Canada myself, boom and bust is a very real part of the mining world and mining history. And preparing these communities for the boom and the changes that come with the boom, as well as the changes that come with the bust or the close, is a really important part of not just closure planning, but community interaction. And preparing them for the reality of being a mining community.
Yeah. Have we got any questions since then? If not, no? Okay. Then just to sort of close out the session, if I could maybe ask each of you the same question. If you could give a junior mining company looking to raise finance one piece of advice, what would be that piece of advice? And I'll work my way down.
Look, I don't think it matters which source of capital you want to go to, whether it's private, whether it's large public, whether it's whatever it is. Ultimately, the backers that provide funding are typically the big institutions, big university endowments, etc. They all have high ESG standards that are getting higher, and there's pretty well nowhere to run from this. You need to build it into your thinking if you want capital.
Amanda?
I would agree. Even if you're starting exploration, I think ESG needs to be part of your plan for developing at every stage. And the earlier that you're thinking about all aspects of ES and G and documenting your process for it, the better off you're going to be in the long run.
Thank you. Guy?
I think one thing that really surprises me is that everyone understands now that mining is a supply chain for renewable energy, but maybe not the lessons on the other side, that if you look at the way that diesel is tracking the cost of solar panels and now batteries as well, even offsetting the intermittency, it seems such a huge win-win for remote sites that you would achieve those savings in terms of your energy, but also create that kind of license to operate in the local region by powering projects from those kind of assets. And I think that's something we're going to see coming, but perhaps there could be even more kind of innovation and engagement with the local communities around how they can also participate in those success stories.
So I think probably just echoing what my fellow panelists have said, early is the word, and also engage with engineering as well, particularly for these alternative energy sources. Look at the opportunities for run-of-river hydro schemes to power your mine. Look at solar. Look at all these other opportunities as part of your ESG plan, and you'll find that will help your legacy. The population will appreciate those types of facilities that will live long after the mine. They will have a power source. If you've got to run a river scheme, it's always there for them. And engage early to get those things on paper, then they'll become reality.
Well, then just to finish off and say thank you. Clearly, this is not an easy process, and it can be difficult to retrofit, but if you can start right at the beginning, you're off to a good start. It's clear that there's many junior mining companies out there that are doing the right thing, but it may be a little bit of a rabbit in headlights to understand what you should be doing. Document everything, as Amanda said. and speak to your stakeholders, your business stakeholders. So speak to your investors and speak to your supply chain and speak to your insurers and find out what their expectations are and find out if they can help you, because chances are they can, and that will really help get you off to the right start and on the right path to adding value. So thank you very much to Minds and Money, to Fasken for sponsoring this panel, and to our audience. Thank you.
Thank you.